Welcome to the Crypto Podcast, where we discuss the latest news and trends in the world of digital currencies and decentralized technologies. I am your host, Lane Gilline, and today we are joined by a special guest, Nike White. Nike, how are you doing today?
Hi, Lane Gilline. I'm doing great. Thanks for having me on the show. There's a lot happening in the world of crypto and blockchain, and I'm excited to discuss it with you.
Absolutely. And speaking of the latest news, we have seen a significant decline in the cost of cryptocurrencies, with Bitcoin and Ethereum both experiencing sharp drops in their value. What do you make of this, Nike?
The decline in Bitcoin's price has been attributed to a number of factors, including the liquidation of Silvergate Bank and U.S. President Joe Biden's tax initiatives. The bank's management announced the liquidation after the financial results of the last quarter were unsatisfactory, which seems to have shaken investor confidence. In addition, the prospect of increased tax pressure from the Biden administration has also caused some concern.
That's definitely something to keep an eye on. How have traders and investors reacted to these developments?
Well, as you might expect, the reaction has been mixed. On the one hand, there's been a lot of negative sentiment towards the increased tax pressure. But on the other hand, it's worth noting that the market value of BTC has actually increased by 20% since the beginning of the year. That's thanks in part to significant growth that was recorded in January following the launch of the Ordinals protocol.
It seems like there's been a lot of volatility in the market lately. Can you tell us more about what's been happening there?
Sure. There have been some pretty significant exchange rate fluctuations recently, and that's led to large volumes of liquidation of traders' positions. Over the past 24 hours, traders have suffered losses of $112 million due to forced liquidation of positions, the vast majority of which were long positions. The volume of long liquidations actually broke the previous record this year, which was recorded on February 8th. So, it seems like a lot of traders were caught off guard by the level of volatility we're seeing in the Bitcoin market right now.
Well, that's definitely something to keep in mind for anyone who's trading in the space. And I understand there's another development that's been causing a lot of speculation in the market recently.
Yes, that's right. The return of coins from the bankrupt Mt. Gox is planned for this year, while the largest lender, the Mt. Gox Investment Fund, has no plans to sell BTC. The plans of other market participants remain unknown. So, there's been a lot of speculation about what might happen if a large number of BTC suddenly enters the market.
It looks like Ethereum had a rough day on the market. According to investing.com index, Ethereum was down 10.18% on Friday, marking its largest one-day percentage loss since November 2022. What do you make of this news, Nike?
Yes, it's definitely a significant drop for Ethereum. It's currently trading at $1,377.10, which is quite a bit lower than its all-time high of $4,864.06 set back in November 2021. However, it's important to note that Ethereum has been experiencing a downward trend over the past week, losing 11.45% in value.
That's true. Ethereum's market cap is now at $170.03 billion, which is 18.53% of the total cryptocurrency market cap. Do you think this is a cause for concern for the cryptocurrency market as a whole?
Well, I wouldn't necessarily say it's a cause for concern, but it is a reminder of the volatility of the cryptocurrency market. We've seen these kinds of drops before, and it's important to keep in mind that cryptocurrencies can be highly unpredictable in terms of their value. However, it's also important to note that the cryptocurrency market as a whole is still relatively new, and we're still learning about how it works and what factors can affect its value.
That's a good point. It's also worth noting that Bitcoin was also down on the same day, and Tether was up 0.02%. Do you think there's any correlation between these changes in value?
There could be some correlation, as all cryptocurrencies are part of the same market. However, it's also important to keep in mind that each cryptocurrency is unique and can be affected by different factors. For example, Bitcoin and Tether have different use cases and functions compared to Ethereum. So we can't necessarily make blanket statements about the cryptocurrency market as a whole based on the performance of one or two specific cryptocurrencies.
Absolutely. Well, it'll be interesting to see how the cryptocurrency market develops in the coming days and weeks. Thanks for your insights, Nike.
Thank you, Langeline. It was great to discuss this news with you.
Moving on to our next topic. It looks like the SEC has revoked the registration of a crypto startup backed by Rapper the Game. Can you tell us more about this, John?
Yes, that's correct. Paragon Coin Limited, which is a crypto firm focused on the marijuana industry, had its license revoked by the SEC for violating securities laws. The firm failed to file periodic reports, and its last filing was from March 2019. Which showed a loss of over $10 million in 2018.
That's unfortunate for the company and its investors. What are the implications of this move by the SEC?
Well, this move shows that the SEC is taking a closer look at the crypto industry and is cracking down on companies that violate securities laws. It also sends a message to other companies that they need to be transparent and comply with regulations if they want to operate in the U.S.
That's a valid point. Do you think this move will affect the overall perception of the crypto industry?
It's hard to say for sure, but it's possible that some investors may become more cautious about investing in crypto startups. On the other hand, this move could also lead to increased confidence in the industry, as it shows that regulators are taking steps to protect investors.
Interesting perspective. Do you have any advice for investors who are looking to invest in the crypto industry?
Absolutely. Investors should do their due diligence and thoroughly research any company they are considering investing in. They should also be aware of the risks associated with investing in the crypto industry, such as volatility and regulatory uncertainty.
Great advice, Nike. Our next topic is related to China, where a deputy to the National People's Congress, Feng Kia, has proposed the establishment of a digital collection regulatory system. John, can you tell us more about this?
Sure. Finkia plans to propose this digital collection regulatory system during the annual Beijing meeting called Two Sessions, which is the nation's most important annual political gathering. Part of the proposal would be clarifying the legal characterization of digital collections, specifically NFTs, and asking the government to clamp down on NFT speculation so that digital collectibles would not be turned into investments and sold as securities.
That's interesting. What are the implications of this move for the NFT industry in China?
This move could lead to increased regulation of the NFT industry in China, which could affect the way NFTs are traded and sold. It's worth noting that some Chinese NFT platforms have already shut down their operations in response to increased regulatory scrutiny.
How do digital collections in China differ from those in other countries?
According to the report, digital collections in China tend to operate on real name transactions using the Chinese currency, RMB, and emphasize content and collection value rather than purely financial value. This is different from other countries, where digital collectibles use virtual currency for anonymous transactions, and users primarily seek financial value.
That's an interesting contrast. What advice do you have for investors who are considering investing in the NFT industry in China?
Investors should be aware of the regulatory landscape in China and do their due diligence before investing in any NFT projects. They should also be prepared for increased regulation and potential restrictions on NFT trading and sales.
A Twitter hashtag relating to a purported artificial intelligence crypto token called Cryptope has been trending on Twitter, and alongside it, A number of very similar-looking Twitter accounts have also sprung up. Nike, what do you make of this crypto hashtag that's been trending on Twitter?
Well, it's quite an interesting development. From what I've seen, there are a lot of accounts on Twitter that are using the name crypto and offering fake giveaways or airdrops. So, it's important for people to be cautious and not fall for these scams.
Absolutely. It's always important to be cautious when it comes to cryptocurrency, but let's focus on the project itself. What do we know about crypto and how it works?
Well, many of these accounts describe the purported project as allowing users to use blockchain to monetize their data with AI. The system is based on Ethereum and scales with a zero-knowledge role-player 2 network. The project purportedly aims to attract decentralized application developers to build on its blockchain. Crypto will offer its GPT tokens as payment for anonymous user data generated from the usage of these dApps.
That's a great point, Nike. It's important to be cautious and not jump to conclusions without proper evidence. It's also interesting to note that the project's name, Crypto, is similar to the AI chatbot that has taken the internet by storm in recent months. Do you think there's any relation between the two?
From what I've seen, there doesn't appear to be any direct relation between the two. While the names are similar, Crypto is focused on using blockchain to monetize user data, while Chat is focused on natural language processing. It's important not to confuse the two, as they are separate projects.
Today, we also want to review the Lido, so let's dive right into it. Can you tell us what Lido is and how it works?
Sure. So, Lido is a liquid staking solution for Ethereum that allows users to stake their ETH without locking up their tokens. Essentially, it allows users to deposit their ETH into a smart contract on the Ethereum blockchain, which then mints an equivalent amount of STF tokens. These STF tokens represent the user's share of the total ETH staked by Lido, and can be traded or used to participate in other DeFi protocols without having to unstake the underlying ETH.
That sounds interesting. Can you tell us what advantages Lido's liquid staking solution has over traditional staking options?
Of course. One of the biggest advantages is that users can take advantage of other opportunities in the DeFi space that require liquidity, such as yield farming, borrowing, and trading. This is because the STF tokens can be traded or used in other protocols without having to unstake the underlying ETH. Additionally, Lido allows users to participate in ETH 2.0 staking with any amount of ETH. Unlike traditional staking options that often have high requirements for participation.
That's great to hear. Do you think Lido's solution is gaining traction in the Ethereum community?
Definitely. Lido is backed by several industry-leading staking providers and is designed to provide users with a more liquid staking experience. This has made it a promising solution for those looking to stake their ETH without sacrificing liquidity. Overall, Lido is gaining traction in the Ethereum community and is worth considering for those interested in staking their ETH.
Well, it sounds like Lido is definitely worth considering for those interested in staking their ETH. All right, let's talk about Lido's staking as a service product. This seems to be one of the key features that sets it apart from traditional staking options. So, how does it work?
Essentially, Lido allows users to stake their ETH without actually locking up their tokens. When you stake with Lido, you're essentially depositing your ETH into a smart contract on the Ethereum blockchain. In exchange, you receive an equivalent amount of STF tokens that represent your share of the total ETH staked by Lido. And the best part is that these STF tokens can be traded or used to participate in other DeFi protocols without having to unstake the underlying ETH.
That's really interesting. So, with Lido, you don't have to worry about freezing your assets or maintaining a validator node, and you can earn rewards with a deposit as small as you want and without restrictions on the number of Ether deposited. But what about fees? Are there any associated with staking on Lido?
Yes, there is a 10% staking fee charged by the platform, but that's a small price to pay for the flexibility and liquidity that Lido provides.
That makes sense. And what about the variety of networks that you can stake tokens from? I saw that Lido supports staking on Ethereum 2.0, Terra, and Solana.
Yes, that's correct. And every time you stake a crypto asset on Lido, you receive a derivative token in a Onion ratio. So, if you stake ETH, you'll receive STIF. And if you stake Luna on Anchor Protocol, you'll receive Bluna. And unlike staked Ether, these derivative tokens can be transferred at any time and free from all the limitations associated with a lack of liquidity.
Well, that's really impressive. Lido seems to be a great solution for those looking for a more flexible and liquid staking experience. But are there any risks associated with using Lido?
Yes, there are definitely some risks that come with liquid staking. For example, there's the risk of smart contract vulnerabilities or bugs, as well as the technical and adoption risks associated with Ethereum. Additionally, there's the risk of slashing for ETH validators and the possibility of STIF price fluctuations.
Right. Those are definitely important factors to consider, but it seems like Lido is doing its best to mitigate these risks and provide a safe and secure staking experience for its users.
Yes, the Lido DAO is constantly working to eliminate these risks to the extent possible, but it's important to communicate them to users so they can make an informed decision about whether or not to use the platform.
So Nike, we've talked about the benefits and risks of using Lido for Ethereum staking, but let's dive a bit deeper into the staking rewards. Can you tell us more about how Lido determines its staking rewards and how that affects users?
Absolutely. So, Lido's staking rewards are variable, which means they can change based on the total amount of ETH that is staked. This is because staking rewards are determined by the Ethereum network, and as more people stake their ETH, the rewards decrease.
Interesting. So how does this impact users who are staking their ETH through Lido?
Well, if you're staking your ETH through Lido, you'll receive a derivative token called STIF in exchange. The amount of STIF you receive will be based on the amount of ETH you stake and the current staking reward rate. So, if the reward rate is high, you'll receive more STIF for your ETH.
But if the reward rate decreases, does that mean users receive fewer STIF tokens?
Exactly. The reward rate decreases. Users will receive fewer STIF tokens for the same amount of ETH staked. However, it's important to note that this doesn't necessarily mean that users will earn less in terms of actual ETH rewards. The amount of ETH rewards will stay the same, but the value of those rewards in terms of STIF may decrease.
Got it. So, what's the maximum reward rate that Lido offers?
Lido has a maximum annual reward rate of 18.10%. But again, this can change based on the total amount of ETH staked. So, users should keep an eye on the current reward rate and adjust their staking accordingly.
That's good to know. It's important to consider the potential fluctuation of staking rewards when deciding whether to use a platform like Lido. Thanks for sharing that with us. It was a really interesting conversation. Nike, that's all the time we have for today's episode. Thank you so much for tuning into our discussion on the latest news in the crypto and blockchain space.
Thank you for inviting me. I look forward to participating in future podcasts.
We hope you found our conversation informative and engaging. Don't forget to follow and like us on social media to stay up to date on the latest news in the world of cryptocurrency and blockchain technology. And if you enjoyed today's episode, be sure to subscribe to our podcast for more in-depth discussions on the topics that matter most to you. Thanks again for listening, and we'll see you next time.